Welcome, everyone, to our discussion on small business planning during the COVID-19 era. Talk about topical. COVID-19 is an invisible enemy that has had a significant impact on our national economy and specifically on small business sector, so it's appropriate. Now, we had a rocky start in dealing with this, but we did get the CARES Act, and particularly the PPP. It's interesting that as we have this broadcast today, this is the last day that businesses can apply for PPP loans. And we're told that there's still a significant balance left. So there's $130 billion left in PPP. So now we're in a situation where we may have a resurgence. That's certainly the issue. And there's been talk in Congress about a new stimulus legislation. My point in starting with that is we plan to talk to our experts about what's next in the short term. But more importantly, we also want to talk about strategies for long-range planning and exit planning. Okay, with that, let's set the stage. Let's talk to our experts here. First of all, Tom Sullivan, you're Vice President at the U.S. Chamber of Commerce dealing with small business policy, so you get a very broad view of American business. Can you provide us with an overview of who the Chamber is and what it does?
Sure, happy to, Steve. Thank you. Thank you for letting me talk with the college today. The U.S. Chamber of Commerce is the largest business advocacy organization in the world. We represent about 3 million businesses, and this includes actually a partnership with the college, about 500 associations, and 1,600 local and state chambers of commerce. When you look at the broad membership that all of those organizations represent, we measure about 96% of the businesses within that group have fewer than 100 employees. About 75% have fewer than 10 employees. So we're truly an advocacy organization that represents small business.
Chris, we've known each other for a while. You and your firm are well known among very successful privately held businesses. That's who you deal with, and the advisors who deal with that. Can you give us a general feel for the kinds of firms that you typically interact with? I think that'll help our audience.
Sure, Steve. We are a 45-person business valuation and financial advisory firm. We value all kinds of businesses, from very small owner-operated businesses up to multi-billion-dollar businesses, so a wide spectrum. I guess mine is the micro view, if Tom's is the macro view of business in general, because our view typically is looking head-on to an individual business. We value all kinds of businesses, as I say. We have niches in banks and in insurance companies and in asset managers and in construction and distribution and things like that. But if there are a lot of companies like you're thinking about, maybe a company right now, if there are a lot of them out there, we have valued one or more of them over the years because, as I say, we value corporate America.
Great. That kind of helps us set the stage, if you will. So going back to you, Tom, before the pandemic, in the small business world, it seems to me we were dealing with issues like the changed tax law and a new regulatory regime coming out of Washington. We were dealing with increased competition on the world stage. And I suppose the big issue was the demographic pig in the python of so many business owners that are approaching retirement age. I think we can all agree that the pandemic almost overnight changed the issues business owners had to grapple with very suddenly. So to put you on the spot, if you had to categorize the top, let's say, 3 challenges small business owners are struggling with right now, what are they?
Well, first of all, let's reverse the clock a little bit. Let's look at 5 months ago, which seems, I think, for most of us 5 years ago, but it really was just 5 months ago. When we did a survey with our partner MetLife, we found that small business confidence was at an all-time high. And the top issue for small businesses in February was finding qualified and willing employees. Fast forward to today, a number one issue for small business is revenue. And this is not simply a line on a balance sheet. This is an emotional and desperate situation for many small businesses that need revenue to keep afloat.
And how much does that differ among companies? Because I mean, some industries like travel companies, that kind of thing, versus let's say online companies. So how much does the pain of the pandemic vary by factors such as geography and size, that kind of thing?
Well, Steve, I'd like to give the macro and then turn to Chris for some of the micro. But from a macro perspective, we know, according to research by Chase, or the Chase Institute, and most small businesses have about 28 days of cushion. Now, why isn't it 30 days or why isn't it 14 days? And basically, Steve, the reason is because at that 28 day is your second pay period where you don't have revenues coming in. And that's when the sky truly, truly falls. So that is at a macro level. When you get into the micro level, every small business is different. It's actually part of the wonderful nature of advocating on behalf of small business, but it does make it difficult when you're trying to design an economic stimulus. How do you benefit the most small businesses, knowing full one that each situation is a little bit different? And so for more on that micro level, let's hear a little bit from Chris.
Yeah, Chris, what are you seeing?
Well, I think that in terms at the micro level, you have certain businesses that were impacted immediately. If you were a restaurant and shut down, then you're not going to last 28 days unless you've got some capital in your right rear pocket. If you are in a hotel business, you're going to be hurting for a long period of time. If you're in some professional services businesses, you might be okay because you have a backlog of business and you can work through it. But if you're in other professional services, if you're a dentist, for example, or if you're a massage therapist or have a company that does those kinds of things, then you're indiscriminately shut down and have no access to revenue. And so I concur with Tom that revenue is a very important focus for small business today. It has to be.
Then if you take that as being a big consideration, Chris, what's been the impact of the pandemic on private business values? It had to have certainly significantly affected valuations.
Steve, let me take a side a detour just for a moment to talk about valuation in general. The value of any business is a function of three things. It's a function of the expected cash flow to the business, the growth of those cash flows, and the risks associated with achieving those cash flows in the future, and the present value of all of that brought back to the present. So with that backdrop, let's look at the pandemic and see what happened. Well, in March, or for us, I think it was the 14th of March, I mean, we shut down. We had a growth spurt because we went from 4 offices to 40. I mentioned that to a client and she said, congratulations. And I said, no, that was not an acquisition, that was a dispersion. And many professional services firms dispersed. So what happens is that the risk associated with future cash flows is increased. The certainty of those future cash flows is increased. And it becomes more and more difficult to estimate those future cash flows for a lot of businesses. But in general, looking at the public securities markets, what we know is that there has been an inherent charge to the values of most publicly traded companies. And we reflect that in basically, for the time being, about an additional point of risk in the discount rate for most small businesses, and then focus absolutely as best we can on expected future cash flow.
So a significant impact. Let me ask one more question before I turn it over to Mark for some questions I know he wants to ask. But going back to Tom, just kind of thinking about this in general, we've had economists tell us, this is kind of the macro issue one more time, that really what the economic problem right now have is a supply chain. not being able to get what you need to be able to offer that to the client and that kind of thing, compared to the recession where we really had a liquidity crunch. What are you seeing now? Because we've had several months to experience this. So we know it started with, were we getting supplies from China and all, but where are we at the macro level now from an economic standpoint?
Well, Steve, I guess I could pretend to be an economist and say on the one hand and on the other hand. So on the one hand, we still have this desperate need for liquidity. And to the credit of Jay Powell and Secretary Steve Mnuchin and Administrator Jovita Carranza, they are addressing the liquidity challenge. However, when you look at the passage of the CARES Act on March 30th, how many of us have realized that this is a completely different situation now near the 4th of July than it was at the end of March? And so the need for liquidity is changing almost on a daily basis, where all of a sudden consumer-faced businesses are in desperate need of personal protective equipment to protect their employees and their customers. We didn't know back in March, we thought that that would be done by Memorial Day, not by 4th of July. So that's on the one hand. On the other hand, you still have supply chain disruptions. I mean, this week is the kickoff of implementation of NAFTA, of the new NAFTA, the USMCA, which was a tremendous boon for supply chains in this continent. This week is actually the start of the execution of USMCA. So you would think that this is a time to celebrate, but when you look at the uniqueness of each type of small business, you see these little disruptions. And so when we look at it from a consumer perspective, why one day is there a shortage of ice cream at the refrigerator, and the next day there's a shortage of toilet paper? So as a consumer, for the first time, really, at least in my recollection, the consumer is actually seeing some of the supply chain disruptions that we talk about at the college have been affecting the small business community for a long time. So we see that same type of oddness in a supply chain disruption within the United States and globally, because this pandemic is not contained within the United States. It is hitting different parts of the world, and each part that it's hitting is actually having some effect on small business manufacturing, which is now truly a global business. So that's my best economist answer of saying, on the one hand, we're still dealing with liquidity issues, and on the other hand, we're still dealing with some supply chain issues. Ultimately, it depends which type of sector and which type of specialty you're dealing with.
Well, Tom, if I could build on that, not just to think about liquidity issues and supply chain, but our owners, and you see businesses that are flourishing. We mentioned things like, online businesses versus travel. So I'm sure you see businesses that are flourishing and those that are really struggling and everything in between. But are any business owners looking at their own retirement planning or exit planning, or is it just, no, we got to, get the fire out, get the water out of the rowboat? Are people looking at that at all for themselves, owners?
So Mark, that's a great question. So first of all, you, I think, highlight the differences. Like a business I spoke with on Monday was talking about how, generally speaking, they do flood damage recovery, and they morphed quickly into house and commercial building disinfection. As you would suspect, they're doing pretty well right now. Okay? There are other businesses not doing well at all because they just cannot get revenue in the door. So the one constant that we see, whether or not you're getting revenue or if you need revenue, is uncertainty. That is a constant through all levels of small businesses that I'm witnessing. And that actually answers your question about kind of retirement planning or succession planning. And the uncertainty is putting a giant red stop sign in front of folks who at one point had thought, well, this would be the time to do succession planning, because they just don't know what to plan for. I would say with one caveat though, there is a sector of businesses, and I suspect this is a sector that is tuned into the college and all the resources that the college has to offer. That section of small businesses were planning pre-pandemic. And that small section of small businesses that probably had a cushion built up are still in the mode of trying to plan for succession and retirement. But if you weren't before, then there's no way in heck that you are right now.
Mark,
Yeah. Go ahead.
if I make a point, I just read a survey conducted by a brokerage firm, and basically they said that they observed that about 65% of business owners were thinking about retiring or selling their business over the next 5 years or so, pre-pandemic. More than half of them said, okay, the value of my business has been hurt, but I think it can recover, and it will recover. Some of them, most of them were going to sell to an outside third party, but I mean, echoing what Tom said, what you have right now is massive uncertainty. Value is shaky. Buyers are not necessarily coming out to buy a lot of businesses right now because of that very uncertainty that's facing the business owner. So I think that what business owners are going to have to do from here forward is really, number one, focus on the revenue, focus on doing the best that you can with your business. But at the same time, you better begin to think about what's going to happen over the next year or two or three. There are, I mean, baby boomers control about 60% of the wealth in the nation. They're aging right now, turning 65 at the rate of 1 every 9 seconds, 10,000 a day. That's a lot of pressure on the exit funnel, if you will, for small business.
Well, as they're thinking,
Mark,
go ahead.
I just want to add one piece, because I have been told almost every hour of every day by small businesses to remain optimistic. And a lot of what Chris and I just touched on is not very optimistic. So I just want to try to put a little bit of a point about a positive that is going on within the small business community. A remarkable entrepreneur in Houston that runs Nightlight Pediatric Urgent Care told me 2 weeks ago. She said, every small business in America is disrupting itself right now. And that disruption will make the small business landscape look very different in 2021. We don't know if it's good or it's bad, but the disruption that's going on will certainly affect the valuation that Chris is talking about. I'm hopeful that that disruption will be positive, but I know that that disruption is happening right now. And I'm certainly hopeful that the disruption leads to a recovery curve, which leads to greater valuation in 2021 and beyond.
Great. You know, kind of a corollary to my previous question, we were talking about retirement planning and exit planning for the owners themselves. You mentioned 5 months ago, the main thing with finding good people. Now the problem's getting people back to work and, you know, meeting my PPP requirements. Do you see any retirement planning for employees going on, or is that kind of on hold as well and people are just worried about current compensation and getting people to show up?
Well, Mark, we're going to see. I mean, in the last 20 months, we've seen, when we were looking at really tight employment numbers, we've seen an enormous amount of policy changes that make available retirement options to small businesses. So now, fast forward to higher unemployment and the hopeful reopening of more and more of the economy, those owners are going to need to attract the best employees. And we know, and certainly the college knows, one way to attract them, and this is certainly above a minimum wage level, but one way to attract them is more robust healthcare options and retirement options. we are actually going to see whether or not those policy changes in the last 24 months, which make retirement options more available, to see whether or not that can help get those employees back into the small employer community so that they can reopen quicker and get back on track. So that's a longer way of saying that we don't know, but we do know that more options are available for small businesses to be able to afford retirement options for their employees.
Mark,
Yeah, that's a little optimistic too. That's good. Go ahead, Chris.
as a businessman, I have long believed that business owners should provide retirement opportunities for their employees. And when I talk to business owners, I encourage that sort of thing. I mean, we have profit sharing plans that are tax advantaged. We have 401ks. We have a variety of potential options that are out there. And it's just really important to try to do that, because over time, employees and the owners themselves, if they avail themselves of that opportunity, can sock away substantial tax deferred dollars and build at least a solid leg for retirement. But this takes, I mean, the best time to have done that was 30 years ago. The next best time is today to be thinking about that sort of thing and taking advantage of the programs that Tom is talking about.
Right, and not to take time out just because of what's happening in the outside world.
Exactly.
Thanks.
And I was thinking about that, going in the outside world beyond COVID-19. And let's get back to the owner, just to start with them. So we know with exit planning for the owner, the big issue they have is this very illiquid business that they have to somehow miraculously convert into a stream of guaranteed retirement income. So let's think about this as we start being positive, like Tom said, and thinking about beyond what's happening this month. Tom, I'm sorry, Chris, can you give us an idea of the challenges a business owner faces in dealing with the reality of having to eventually exit? I mean, what are the things that you would deal with, whether it was COVID-19 or a few months before?
Steve, that's a really good question. So maybe 3 or 4 years ago, I wrote a blog post about 2 business owners, and I called them Martin and Steve. Not you, but Martin and Steve. Both of them had businesses that did about $3 million a year, and they earned about $600,000 pre-owner compensation. Martin thought that he was a very valuable employee, and he and his wife lived on $600,000 a year for many years, and his total retirement savings was about $1 million or less. Steve, on the other hand, had a similar business, but he said, you know, my market wage is probably $200,000. I'm making $600,000 here. So, sweetheart, let's you and I live on $300,000, and we'll save after taxes all of the rest. And they'd been doing that for 25 years and had $6 or $7 million in a portfolio that was managed by a financial planner in their community. Well, Martin is not in a position to retire. I mean, he has a longer term horizon. Both of them wanted to retire in the next couple of years. Steve, on the other hand, because he planned ahead, can retire in a couple of years. Let's say the business is worth a couple of million. He can retire on more than he's been living on for the last 20 years because he's been prescient and taken care of that sort of thing. So the message there, I think, is to take a longer term view, but starting right now, and begin to do little things that you can to improve your retirement situation. Maybe Martin's going to have to grow the value of the business. He's going to have to be a lot more involved in his business than he hoped to be. But there's no magic bullet for increasing the value of a business. I mean, you increase revenue and you increase earnings and you increase value. And hopefully reduce risk and increase value.
But when you're dealing with them, do you have some triggers? Do you have some motivators to get them to act? Because certainly I think people are just in this I can't do anything phase right now. What might motivate them to actually do something going forward to exit their business eventually?
Well, I think that the greatest motivator is the greatest motivator for action today should be what happened and absolutely blindsided every one of us. The pandemic was not in my planning for retirement. It was not in anyone's planning for retirement. It was just an absolute surprise. So that should motivate anyone who was not doing anything, the fear, if nothing else, of the uncertainty in the future and the need to develop some form of meaningful retirement in the time that you have left.
Steve, could I mention one additional motivator that we find at the U.S. Chamber of Commerce that is really powerful, and that is the peer network. Now, whether that peer network exists in the college, whether that peer network exists in a local chamber of commerce, or whether or not that peer network exists in the group that I manage, which is a group of 100 top small business leaders. I find that the candor that exists from an entrepreneur to an entrepreneur is unparalleled. They're competitive, yes, but the idea that they bounce ideas and motivations and future plans off of each other is very, very powerful motivator. And so if there was ever a time where that peer network is the most valuable, it's right now.
So we've talked a little bit about PPP at the beginning, and debt is really what greases the wheels of commerce. So with PPP coming to essentially an end today, get your applications in. Tom, what do you see, or what do you in the chamber see might be the next steps going forward?
Well, first of all, we realize that there are parts of the small business economy that still are desperate for liquidity. There's a research by the National Bureau of Economic Research that shows that Black-owned businesses are closing at twice the rate of the average. So the average closure rate right now is about 22%. Robert Fairley's survey shows that Black-owned businesses are closing at close to 44%. And so these communities that don't necessarily have a banker or a lender on speed dial need more time to get a PPP loan. And so we are asking Congress to extend the deadline for PPP. Looking a little bit more broadly, we do know that Congress is going to take up another stimulus bill. The president has agreed that there are parts of the economy that still need some more liquidity. The U.S. Chamber of Commerce is looking at some targeted measures that will get small businesses, give them a bridge. However, and Chris, I think, would nod his head at the importance of this, that bridge cannot create an undue debt burden. Small businesses are debt averse, and our economy overall is a little bit debt adverse. And so that is certainly on our conscience. And last but not least, we are insisting that there be a liability safe harbor for those businesses that do the right thing. They follow CDC guidance to protect their employees and their customers. They must be given a safe harbor from liability, because that will give them the certainty needed to do what we've discussed here today with the college, and that is to plan for the future.
So Chris, what portion of your clients took advantage of PPP? Or can you talk a little bit about the experience that you had with your clients?
Knowing that I was going to be on this session, I did a little survey with the professionals at Mercer Capital, and I asked them to give me some feedback as to who of our active clients, the ones that we're dealing with right now, who of our active clients actually exercised the PPP loan. And it's something north of 50% based upon that informal survey of talking with my fellow professionals here. There were a lot of reasons for the desire to take the PPP loan, but one of the biggest reasons is that going back to February and early March, what we found ourselves in was a period of enormous uncertainty. With the economy shutting down, I'd like to think that given the nature of our business, that the bad things that will happen to us would happen farther into the future as opposed to right this minute. But on the other hand, we don't know what's going to happen because we don't know what's going to happen to our clients that we're currently doing business with. So I use that as a personal example to show that that uncertainty existed for every business out there at the time, and many took advantage of the PPP because that was a safety net, if you will, that provided a certain amount of liquidity to face uncertain times, the pandemic times that we've been going through for the last 100+ days.
Did you have any or know of any who took the money and then thought differently after?
We had a couple of clients that took down a PPP loan, and then if you'll go back to March, late March, and perhaps early April, there was a great deal of discussion in the press about, well, you needed to certify that you had a need for this money. Well, that certification lends itself to all kinds of interpretations. And we had a couple of clients that said, you know, we think we're going to make it, and I don't want to deal with all of that. So they just they put the money back. But then we had some that chose not to take down a loan. They felt they had adequate liquidity.
We're certainly dealing with that. So many of the people on this broadcast are financial advisors, and it's become unclear exactly when they have to disclose that, when they don't. And so that's caused some people to return the money. Let me ask a question to Tom, just kind of looking beyond PPP. Does the chamber see other things going on as far as making debt easier to do or easier to pay off? Is there something beyond just PPP going on as far as the amount of debt that business owners have and leverage that they have in the economy?
Well, Steve, I'll touch just briefly on, I know we're all desperate to get past PPP, but I do want to touch on it because there are 24 weeks where a PPP borrower has to spend out that loan. Okay? And so we are working with SBA and Treasury to try to make that forgiveness process as easy as possible. And in fact, we're actually working with Congress right now to try to pass a law that say, look, you got a PPP loan less than $250,000, it should be automatically forgiven. I mean, we can't control necessarily the uncertainty of a lot of what we're dealing with, but we can control the certainty of government stimulus, and we should control that certainty. And we should be giving small businesses the certainty that if you said you needed help and we know you need help, then here's the help. You don't have to go through arithmetic gymnastics to try to get that help. And so that is going to take a good amount of energy and work, but we're up to the task. As far as getting past that, I mean, there recently was a PPP Flexibility Act that was passed, and it allows those small business PPP borrowers to also defer the employer portion of payroll taxes. So this was this weird hypocrisy that existed for a couple of months of having to choose, like, okay, well, you could free up some liquidity by postponing your employer portion of payroll taxes, but that means you can't get a PPP. And luckily, Congress is like, well, that really doesn't make sense. We just got to get this help to small businesses and not worry about one program or the other. And finally, they fixed that. And so I think we see this additional measures using, allowing the small businesses to keep some more of what they otherwise would be paying the government and pushing off their obligations. That's an attractive set of options. I think Senator Portman from Ohio is looking at trying to solve this dilemma of who wants to take care of an employee more, your state unemployment office or a small business owner, which is a terrible set of choices to have. And Senator Portman has said, well, wait a minute, let's take this added incentive in unemployment and see whether or not we can use the tax code or state unemployment or federal unemployment and have it go with the worker back to help these small businesses reopen. And I think that deserves a lot of attention. And we're trying to work with the senator and others to have a proposal be bipartisan, because we believe nothing is going to happen leading up to the election that isn't bipartisan. And two, using our hindsight of the PPP program, it's got to be simple in order to work. So I think that when Senator Portman is not only trying to help small businesses bridge the pandemic, but B, make it bipartisan, and C, make it simple, I think that there's a solution waiting to happen there.
Makes sense. Well, let's go beyond where we are now with it. And I'm going to direct this at Chris, because again, on exit planning. So I think it would help for people listening. What are the sources of leverage? What are the sources of borrowing to actually facilitate the exit planning? And is there much of it out there right now in the environment we're in?
With small businesses, maybe say that under 100 employees, I think what you find is that certainly under the 50 employee range, the primary sources of financing for sale, if you will, or even for operations, would be bank financing. For the secondary source of financing for sale would be, unfortunately, owner financing. And in terms of owner financing, you better have a good lawyer, and you better have good protections, because if you sell your business and take back paper from the owner, the new owner, or from the business, you better be fairly confident that you're going to get your principal and interest when due. So you've got both bank financing and owner financing. In terms of operations, I think the smaller banks right now are keenly interested in making loans in spite of everything. I mean, a number of banks put on increase their loan portfolio temporarily, substantially with the PPP, but now banks really need loans. You know, there's margin compression out there in a zero interest rate world, and the only way that a bank can get a spread is through making a loan and taking that risk. So I'm on the board of a healthcare company, and we're redoing our arrangement in terms of financing receivables. And we've had a very positive response from the local banking community with respect to interest in taking on that engagement. I think that, and by the way, speaking of bank financing, Steve, there's an idea that I'll float right now while it's first and forefront. If a business is big enough and is cash flowing nicely, one technique that is good for retirement planning would be to consider taking on some leverage and perhaps making a special distribution or a special dividend, and then taking that outside the business, investing in other assets and diversifying, and then use the business to pay down that debt. In other words, you pre-fund your savings. But that takes thinking ahead. That takes working with your banker, and that takes working with a lot of people on this phone call or on this Zoominar today who are actual advisors to small business, because these are ideas that you can be promoting to them in the right circumstance.
That's a great one. And by the way, on behalf of the other three panelists, all the lawyers are great lawyers. I just thought I'd let you know that to your comment about lawyers. So where does this leave us? I hate to put you on the spot on this, but let's assume pandemic eventually calms down. Where do you see exit planning going because of the demographics and the financials? Where's exit planning going in the next few years, if you will?
A couple of guys wrote a book in 2003 called The $10 Trillion Opportunity. They were focused on baby boomers who would be retiring. Well, I couldn't validate their $10 trillion opportunity back then, but I can validate it pretty much today. There is at least $10 trillion of business value in relatively small businesses out there. And many of those businesses, perhaps a majority, are owned by boomers who are going to have to retire. So what do you have to do if you're not doing it already? You know, there are a lot of people who focus on exit planning. And what they do is they're a team leader, if you will, for getting together the accounting or the legal or the appraisal advice that you need. But a business owner needs to have somebody that he or she can look to and rely on for good ideas and for good advice. And if you can become that advisor to a business owner, you can perhaps help them move in the right direction so that when they're ready to retire, they'll have the ability to retire.
Well, you mentioned, 2003, there was a little bit of a different tax environment back then when that story you told. In fact, 5 years ago was a lot different. 5 months ago, things were booming. I think part of that might have been because of the fact that tax policy for business and business owners was, pretty favorable so far as low income taxes, as well as transfer taxes not being an issue for a lot of people. So I'll start with Chris. How do you think taxes have played into this process of exit planning for business owners?
Well, the biggest impact that the Tax Cut and Jobs Act of 2017 had going into effect in January of 2018 was basically to have sort of a one-time shift in the value of most businesses. Cutting to the chase, if your business was worth 4 times EBITDA less debt before, then it's probably worth 4.5 or 5 times EBITDA after, simply because of the lower tax rate and the impact that that has on increasing cash flow. So I think the biggest impact is increasing the opportunity for higher value. The next impact is increasing the opportunity to save going forward out of discretionary cash flow, because if you're saving after-tax dollars at a lower tax rate, and if we go to some of the programs that Tom was mentioning, that I was mentioning, where you begin to save in pre-tax dollars, then you can accelerate the tax benefit along the way and accelerate the ability to retire.
So Tom, pre-pandemic, what effect were you seeing on American businesses from that tax policy I mentioned? Favorable income tax rates and transfer tax rates being less of an issue to a number of people.
We saw an enormous reinvestment by small businesses into their own operations. And it spanned the entire spectrum of reinvestment opportunities, whether that be a more robust package of retirement and healthcare benefits for employees, whether it's, I love talking about my friend up in Braintree, who supplies bread for the nation's Panera. He bought a new oven. So ranging from a new oven to a new landscaping truck to a new facility to better employment benefits, that type of reinvestment became the standard leading up to February. And then that coincides with some leaps to a growth strategy that many small businesses had not anticipated prior to last year. So it would be nice to get back on track for those small businesses to start thinking about growth. I don't think that's going to happen until 2021 at the earliest, but that certainly was the landscape that we were dealing with at the beginning of this year. I do want to get at, Chris Mercer's middle name is planning, and there is a part of the tax code that is in need for political candidates to say straight out to the voters, you either support it or don't support it. And that is to make permanent the small business individual rate cuts that were part of the tax cuts that we're talking about. I think every voter going into November has to know whether or not who they're going to elect will make those tax cuts permanent that are set to expire after 2025. Now, that's not because every person that gets elected is going to be reelected through 2025, but it is a signal, I think, about the importance for small businesses to be able to plan. Because when you're looking at a reinvestment strategy that leapfrogs into a growth strategy, you can't do that if you don't know what your tax rates are going to be in the following year.
Yeah, and I think you kind of know with corporate, they say that's 21% permanent, as much as permanent as anything can be, but not only the business taxes, but also the estate tax. You know, similar thing, difficult to plan when you see an exemption that might be going down. What do you think, or that scheduled to go down, and who knows where it will go? What do you think about state municipal taxes? Any views on that, and whether, you know, all the crunch that they're under now, would that cause some, you know, significant changes that could impact business? I'm asking Tom.
Oh, thank you. Well, I mean, we see a competitive environment right now, and from that perspective, small businesses have a tremendous vote. Because they can quite literally vote with their feet. So we see tax jurisdictions at a municipal and at a state level very attractive for business growth. You're going to see, coming out of the pandemic, you're going to see small businesses looking to locate in those areas that have beneficial tax policies. And so from where I sit at the U.S. Chamber of Commerce, competition is good, and tax policy is no exception to that rule.
And small businesses, every business still has to pay the state taxes, whatever they are, of course. And we factor that into our valuation calculations. Mm-hmm. To the extent that someone is in a lower tax jurisdiction, it's quite possible that they get a little boost in value, a little increase in the calculated multiple.
I see we've got a little less than 15 minutes. So what I want to do is kind of wrap this up so we get to questions. We're getting a lot of really, really good questions. I will tell you some of them are kind of politically oriented, and I'm going to try to avoid that as much as possible, just for obvious reasons. But let me first go to you, Tom, just before we get into some of the questions. What else is the chamber up to? I mean, what are some of the other issues that you're dealing with without necessarily the panic of what's going on with the pandemic?
Steve, I would encourage those folks who have insomnia to go to uschamber.com and just kind of scroll through the list. Tom Donahue and Suzanne Clark, the two leaders of the two biggest bosses where I work, have said frequently that they review over 400 issues that are hot at the White House or Congress on any given day. And so I think the last 13 minutes are too short for me to go into those.
Right. Understood. And one last thing to Chris before we go into questions. You and I could spend a lot of time telling war stories. And by the way, this is a unpaid advertisement. Chris writes great books in the industry and has this great blog that just kind of keeps me up to date on what's going on. So I would refer you to that. But again, because we have so many advisors on the phone, would you describe, because this is not the typical thing for a lot of the people on the phone, what does the exit planning team look like? So when you go out there with all the things you do and you're working with a business owner to start the exit plan, what's that team look like?
Well, first off, we're not going to be the team leader on exit planning. We're a valuation and an advisory firm. The way that I like to talk to business owners and to advisors is to say that business owners have an investment in their business, and it has a value. And I'm going to use a $10 million value just to make the numbers easy to deal with. If you have $10 million invested in equities with a money management firm, you're going to pay 0.5%, 0.75% to manage that money. And I say, well, business owners ought to devote 1% of the value of their business each year into managing the wealth. And they say, well, we're managing the business. I'm saying, no, manage the wealth in your business. One of the fundamental premises of a book I wrote, Unlocking Private Company Wealth, is called the 1% solution. And that is, you create the budget with 1% of value, and then you get your team leader, your exit planner, Then you do the legal reviews that you need to do and get your buy-sell agreement working like it's supposed to work. And then you get your accountant to do the kinds of things that you know that you need to do. And you fix the things at the business that need fixing. Well, if you do those things, you're probably, oh, you get an appraisal, of course. I forgot that. But if you do those things, you'll be well within your budget, and then you will be managing the wealth, and you will have a team of people that you bring in at the right times to do what they need to do and charge you what they need to charge you to do what you need to do. One of the best investments that you can possibly make is investing in managing your wealth.
Makes sense. So I think we'll go ahead and start asking some questions. And Mark, you've probably been monitoring, so have I. There are a lot of different questions. So let me just kind of throw out some of the ones that I see that has some patterns on. Tom, one of the issues obviously has been this whole thing about unemployment, insurance, whether that's going to continue, and at the same time, PPP. So a lot of the questions kind of revolve around that. Is there anything that you can say on how they're dealing with that? Because obviously, well, Senator Grassley in my state has been saying the trouble is sometimes it's more profitable to go on unemployment than to go back to where you were before. What's going on just kind of in general with that issue?
Well, this will be odd advice coming from a Washington, D.C. based small business advocate, but you do not want to make business financial decisions on what Congress may or may not do. So today is the last day banks are accepting, SBA is accepting applications for PPP loans. The only lender still open from an open window on PPP that I'm aware of right at this moment is if you are a QuickBooks user, you can go through that QuickBooks program in order to apply for PP. And the rationale makes sense. I mean, they have all the data, underlying data from your QuickBooks, so it's fairly easy for them to process the information to get a PPP loan. As far as unemployment goes, the enhanced unemployment benefits end on July 30th. So knowing that today's the last day of PPP, July 30, at the end of July, enhanced unemployment ends. I think based on those 2 points on a calendar is what individuals and small businesses are faced with, and those are the decisions that they have to make. But I would caution against making decisions on what Congress may or may not do. That's always an equation for bad things to happen. And even though I am based in Washington, D.C. and have incredible optimism of the power and bipartisan nature of Congress working together to help small business, I'm always reminded to be pragmatic and to say that you cannot base your business decisions on what those in elected office may or may not do.
All right. Well, let me ask another question then. Mark, why don't you see what questions you see in there that might be, they're all good, but to bring up. One thing, I saw a couple references to the Secure Act that we had. What a surprise. So we had the Secure Act in December and we had the CARES Act right after that. One of the things that it had was legislation on the employer side that hopefully will make pension planning a little easier with the multi-employer plans and that kind of thing. So either one of you, but probably start with Tom, how are you feeling about that? And is there, a lot of us are talking, is there a Secure Act Part 2 coming about to help, I guess what we're basically saying, make it easier for employers to encourage retirement savings? What's going on there?
Well, Steve, thank you for that question. As I had mentioned earlier in the webinar, we feel as though the work that has been done over the last 24 months, making more and more retirement options available for small businesses to give their employees, we think that right now is going to be the test on whether or not that works, because you've got higher unemployment. So the question is going to be, how can you attract in the best and most available talent? And retirement and healthcare for those above minimum wage, that's an important caveat to mention, but that's going to be the test. Can we use all of the policy changes that have happened, including in the Secure Act, to bring those employees into small businesses who more and more have these types of options available to them. So we'll see. Chris, how do you react to some of the changes in a positive way to kind of solving the employment situation looking ahead?
Well, I think that good benefits in terms of retirement planning are an excellent employee retention and attraction tool. Probably a better retention tool than attraction, because most of the young people that we hire, for example, are not thinking about retirement. However, those people who have been at our company for a long time are thinking about retirement, because we have retirement vehicles in place to help people focus, and they've been very, very positive in terms of employee retention. And that's an important aspect in business, because it's very expensive to hire people and to train people. Yes. So you want to do everything that you can to attract good people and then keep them with you for the long run.
Well, there are a number of great questions out there, so I tried to look for one that both of you could, cover. And if you look at, it's bad enough we have pandemics, but how do small independent advisors survive the constant onslaught of, regulation and change in the industry, things like DOL, Reg BI that come and go? I know, do those things, impact valuations, for example, Chris? Is there any advice you would have, Tom, on how people can best keep up or align themselves to be prepared to deal with those things as well as the bigger challenges we have?
I'll try first. First, I would say, echoing what Tom said earlier in the hour, and that is stay optimistic. There is no downside to staying optimistic and to being optimistic about the future. Do some of these things affect value? Yes, there's not a direct correlation, but value is a complicated equation that takes into account, management and industry and all kinds of things. And with something changing at the margin, it's not going to necessarily affect business value directly. The pandemic sets in place a new risk that hopefully will go away, but it has had an impact on value to the tune of maybe 10%, other things being equal. More earlier, but we've had a recovery in value today.
Mark, my advice to independent investment advisors is to do what you continue to do now, and that is build trust. Now, here's the catch. How do you build trust? Join your local chamber of commerce. I say that for an obvious plug, but there's truth in that, is that in order to build trust, you have got to be a business leader. And I know I'm preaching to the choir. The folks who are dialing in to the college right now and listening to this webinar, you are leaders. So you're halfway there. So go the other half, join your local chamber so you're amongst leaders. You continue to build that trust relationship, which will benefit your business.
This is where I get to wrap things up, but I really do want to, first of all, thank everybody for attending. We have quite a number on the line, and thank you, our panelists, for sharing your wisdom during these challenging times. We thought it would be interesting to get a group like you with the diverse backgrounds you have, and it really has succeeded in doing that. But before you all run off the line, I just want to let you know, at the college, we're all about applied knowledge. That's what we do here. That's why we had such great people as Tom and Chris on the line to say, a lot of people that are dealing with these issues own businesses. They may be very small, maybe very large. Then in a few weeks, be on the lookout. We're going to have a PDF guide to small business planning in these challenging times. So thank you again for our esteemed panelists and Mark. And to everybody else, be safe, be well, and continue to be the pillars of guidance for your clients and your communities. Thanks a lot.
Thanks, folks.
Thank you.